It's time for the midweek check-in here on Stonkcast. Folks, we got fresh drama between President Trump and the Fed, in particular, Daddy Powell. Also, Congress is fumbling yet again some crypto legislation. We'll break down the latest on that, plus key economic data yet to come out this week. And stick around till the end. The Wall Street Bets crowd is back at it, and they got a new target. Don't forget to like, subscribe, and follow wherever you listen to podcasts. And now, folks, let's get into it.
No, Frieza! Don't do it! Go!
You're watching Stonkcast.
Welcome back to Stonkcast, the market show for the average Joe. Whether you're a diamond-handed degenerate looking for the next 500% play or a more conservative swing trader or investor, we've got you covered. We tackle the latest market news, give our 2 cents, and maybe, just maybe, help you make some money along the way. I'm your host, as always, Brandon Shar. Welcome back, folks. We got a midweek check-in to get into, so let's jump right into it. First of all, let's do a market check-in and kind of see where things stand right now. Quick look at how we wrapped up on Wednesday. Overall, a pretty muted response, I would say, from the market. You had a little bit of green, little bit of red. You had Johnson & Johnson, which reported earnings, was up pretty nicely, over 6%. Tesla had a decent day as well. And AMD, not too bad either. But overall, you know, it wasn't anything crazy. If we do a quick check-in on the S&P 500 from Wednesday, we are currently sitting at 62.63. And, based off of my Fibonacci extension levels, we are creeping up there to 63.34. That's my first target for the S&P 500, which it looks like, barring any more crazy news, which we'll get into, we could potentially hit that. Beyond that, I'm looking at 64, 67, but as of right now, we've had a couple days really of just consolidation, I guess you could call it, which is understandable considering the run that we've been on. So let's do a quick look at the NASDAQ and see how things are looking there. Tech-heavy NASDAQ currently sitting at 22,907 on the indices. And this hit an all-time high literally on Tuesday. Pretty bullish candle close on the daily for Wednesday, so still looking good there as well. Let's do a quick check-in on the Russell 2000, and still holding above the 200-day moving average. I mean, really up to this point, the Russell has been lagging the NASDAQ and the S&P 500, so as long as those continue to hold up, I would expect that we see small caps do the same. So that's where we're at there. The VIX did creep up a little bit on Wednesday. Nothing too wild. Currently sitting at 17, although it did spike all the way up to almost 20. And, I'll get into why that was here in a moment. And then, of course, crypto. The crypto market, folks, has been running. Bitcoin currently sitting at time of recording at 118,348, and we did hit an all-time high of 123,000 just a couple days ago. So Bitcoin is continuing to rip, and so that's good really for just a risk-on sentiment all around. Let's do one thing I want to show real quick here. If we take a look at SPY for those who are on YouTube, and we just look at intraday, right, from Wednesday. We opened up, kind of chopped around, came down a little bit, and then right around 11 a.m., we got a massive flush on the ETF for the S&P 500 SPY. Went all the way from 623 down to 618, literally in a matter of 15 minutes or so, and then recovered. So you might be asking, Brandon, what caused such a massive dip intraday? And that leads us to our next point here. According to CBS News, Trump asked GOP lawmakers if he should fire Fed Chair Jerome Powell. That was the big whammy. Obviously, we know that President Trump and Jerome Powell have not been seeing eye to eye for a while. They are definitely not two peas in a pot. We do know that President Trump has felt very strongly for a while now that he believes that Jerome Powell should cut rates. He hasn't done that, and so, there's been a lot of tension there. So this, according to CBS News, President Trump on Tuesday asked a group of House Republicans if he should fire Federal Reserve Chair Jerome Powell, and people in the room voiced approval. Several sources said Mr. Trump indicated he will do it. Mr. Trump on Wednesday confirmed to reporters in the Oval Office that he spoke to lawmakers about ousting Powell. He said, quote, "I talked to them about the concept of firing him. I said, 'What do you think?' Almost all of them said I should, but I'm more conservative than they are." Sources told CBS News that Mr. Trump had the comments to the Republican House members in the Oval Office on Tuesday night. Made the comments to Republican House members in the Oval Office Tuesday night after they blocked a procedural vote that would have advanced cryptocurrency legislation in the House, favored by President Trump. The idea of a president removing a Fed chair is legally untested. Federal law says the chair can only be fired for cause, quote unquote cause. The action could have serious negative effects on financial markets. Asked Wednesday if he wants Powell investigated for fraud related to the renovations of the Fed headquarters, President Trump said, "Well, I think he's already under investigation. He spent far more money than he was supposed to rebuilding. I think he's got some problems," President Trump said. He added, "There are many people who want the chair role." So that's where we're at right now. It's been a very testy week in the market, in particular on Wednesday, due to some of these rumors. Supposedly President Trump had a letter already written up, just hadn't sent it out yet, and now he's backpedaling in a sense after everybody except him was reporting at the White House that he was going to fire Jerome Powell. Then President Trump came out and said, "Hey, look, no, I'm not going to fire him." So a lot of uncertainty and, of course, a lot of tension right now. And we know that President Trump is the kind of man who would definitely pull the trigger if he felt like he needed to. So while we've never exactly seen a president fire a Fed chair, I guess, we could definitely see the first one happening here. I could definitely see it. As far as a market impact, right? So what happens if Trump fires Fed Chair Powell? According to the CNBC article, this would be a mess, analysts warn. A new research note gaming out possible scenarios if President Donald Trump decided to fire Federal Reserve Chairman Jerome Powell warns that regardless of what exactly happens next, this would be a mess. We expect, as does everyone else, that it would be significantly negative for markets, likely driving both an equity sell-off and a counterproductive spike in long-term yields. Wolf researchers Tobin Marcus and Shutong Zhu write in the note to clients. Wolf Research speculated that the Supreme Court could ultimately decide whether Trump has the power to fire Powell for cause. The firm issued the analysis just hours after Powell's tenure as head of the central bank looked extremely shaky and then abruptly looked less so. A senior White House official told CNBC earlier Wednesday that Trump had told a group of Republican members of Congress the night before that he likely will fire Powell soon. But during a question and answer session in the Oval Office with reporters shortly after the official spoke, Trump quickly and publicly denied what his White House was saying. President Trump, quote, "We're not planning on doing it. I don't rule out anything, but I think it's highly unlikely unless he has to leave for fraud." Trump is notoriously, he basically has a long track record of firing employees very soon after saying they have his full support. So, it wouldn't be out of the norm in this situation for President Trump to, pull the trigger. In Powell's case, however, Trump has been complaining for months, blasting the Fed chair for not cutting interest rates, despite the president's demand that the central bank do so. So that's where we're at right now. And I agree with this article. I think that if President Trump were to fire Jerome Powell, that would be a very big blow to this market rally. And I think on some level, he has to understand that. Firing the Fed chair, Jerome Powell, which is supposed to be, right, an independent entity, would essentially turn it more into a political weapon. At least that's how it would be viewed. And I think that's part of the reason why you would see markets most likely sell off viciously if this actually happened. And the interesting thing is that Jerome Powell was actually appointed chairman of the Fed by President Trump in his first term, and then President Biden left him on. And now that Trump is back in office, it's essentially as if he just wants to have his own Fed chair. He wants to put his own guy in there. So that's where we're at right now. We've talked about it before, but as far as interest rate cuts, the odds of a September cut look dimmer and dimmer as we get really solid hard data. We got CPI, we got PPI data that came out this week on Tuesday and Wednesday respectively. And overall, they don't look that bad, honestly. So, it's going to be really, really interesting. Jerome Powell, give him credit. He's held his ground despite all the political pressure, not caving in to the administration and what they want to do, and sticking to what he believes is best. So that's where we are at right now on that. Moving on to some other activity happening on the Hill. This, according to CNBC, crypto regulation stumbles in Congress for a second day. The future of a trio of crypto regulation bills was in limbo late Wednesday after the second day of opposition from conservative House Republicans brought the legislation to a standstill. Fresh opposition emerged earlier in the day from a new bloc of Republicans who objected to last-minute changes proposed to appease the original conservative holdouts from the day before. Negotiations are ongoing, but as of 5:30 p.m., more than half a dozen Republicans have voted, with all Democrats against letting two of the regulation bills proceed in their current forms. House Speaker Mike Johnson can lose only a handful of Republican votes and still pass the measure in a party line vote. The stalemate has fueled doubts over whether the House Republican Conference can align its differing views on crypto regulation enough to advance bills that, by and large, enjoy broad-based support. Wednesday's new stumbles also raise questions about the limits of President Donald Trump's influence over members of the party he leads. The second attempt to pass the rules, a necessary step to allow debate, comes after 11th hour negotiations and Trump's intervention Tuesday evening to get another group of holdouts on board. Trump met in the Oval Office late Tuesday evening with about a dozen conservative Republicans. Afterward, he said they had, quote, all agreed to vote in favor of the rule, according to a late-night True Social post. So we continue to get some more, some more turmoil, some more holdouts as it relates to this crypto regulation. And really, here's the thing, too, is that President Trump is pro-crypto. I think that's part of the reason, I think it's fair to say, why we see Bitcoin at new all-time highs, because the crypto market knows that President Trump is pro-crypto, and we got this new reserve, and, we're trying to pass this legislation. But as of right now, we continue to have difficulties doing that. Tuesday night was a no-go. Wednesday was a no-go. So we'll see where we go from here, but still struggling to get this through. So we'll see what happens. Definitely something to keep your eye on, especially if you're involved in any way, shape, or form in the crypto market. Keep in mind there's various ETFs that you can track as well when it comes to crypto. IBIT is one, IBIT, and those are definitely plays that are on the table if this goes through. If it doesn't go through, that could be a bearish play. So definitely have some crypto related stocks, ETFs, if you will, anything like that on your radar. Keep an eye on the crypto market, basically. All right, moving on. Let's do a quick check-in on the economic calendar, see what we got coming up. So obviously, as I mentioned earlier, we had CPI that came out on Tuesday, July 15th. Overall, it was in line with, basically what we expected. And actually, we saw the price of eggs drop something like 12%, I heard. If you recall, a few months ago, the price of eggs was the main talking point about how insanely high they were. They continue to drop. So for anyone tracking the price of eggs, there you go. I guess that's good news. We also got PPI data that came out on Wednesday. That's the Producer Price Index. And that also came in line. So basically, as of right now, inflation data that we got still looks pretty good. Now, on Thursday, 8:30 a.m. Eastern Time, we are going to get initial jobless claims coming out. That's going to be a very, very important reading. And we also get core retail sales coming out at the same time. So a double whammy Thursday morning, 8:30 a.m. Eastern. And really, it's going to be very interesting to see, especially with initial jobless claims. You know, right now the projection for that is 233,000 versus a prior of 227,000. So if that number comes in, you know, weaker than 233, then that's just another checkbox for Jerome Powell and the Fed saying that the hard data is looking good. Now if that comes in super, super hot, over 233, you know, that could be a bullish move for the market. As weird as that sounds, you would think if we have more jobless claims, it would be a negative thing for the market. But if you get more, that could be a kind of a signal that, hey, the Fed might be more inclined to cut rates if we're starting to see cracks in the labor market. But we'll see what happens there. But core retail sales, the consumer holds up this market in a sense. And so we want to see what those retail sales look like. The projection is 0.3% month over month for June. So we'll see what we get going on there. And that's what we got for economic data. That kind of rounds out the week. It's been a jam-packed week. Also keep in mind that we have had earnings season kicking off for Q2. So just a few things to point out here. We've had some bank earnings. Goldman Sachs has been killing it. They reported earnings, and they basically, Goldman tops estimates as traders generate $840 million more revenue than expected. They did pretty great. Goldman, is getting their price target, raised by a lot of different analysts based off of that. We saw JP Morgan give out earnings. We saw BlackRock falls more than 5% on mixed earnings. So a lot of banks coming out this week. And also ASML drops 11% after chip giant says it can't confirm that it will grow in 2026. That's not great. So really a mixed bag of various things. Also, airlines have kind of been in the news. We saw Delta report earnings that was actually pretty good. Really, airlines as a whole has kind of been lagging this overall bull market run. Anything airlines related might be something to keep an eye on. Me personally, I'm keeping an eye on Delta. And then keep in mind that we're going to get tech earnings coming up over the next couple of weeks. We got Netflix coming up. We're going to have Meta. We're going to have Tesla earnings, all the big boys coming out. So definitely a very active time of the year as we enter into another season of earnings. And with that, we move on to our last piece here. For all my degenerates out there, there is a new high-flying stock, folks. It is called Opendoor Technologies. This, according to the Motley Fool, shares of Opendoor Technologies were soaring again on Wednesday as the meme stock tailwind that has pushed the online home flipping stock up in recent weeks seemed to gain strength today, even though there was no company-specific news out on the company. The notion that Opendoor could be the next Carvana seems to be picking up steam online and social media forums like X and Reddit, and trading volume in the stock has soared. So this is an interesting company, Opendoor. This is a look at their website. Basically, get cash offers today for your home. Make the easy move. So basically, they're just doing everything online. And this was really a COVID darling, if you will, back when GameStop and AMC were kind of doing their thing. And the interesting thing about this stock in particular is the fact that it is freaking flying of late. Now, this is a 10-year weekly chart. We had a high at 39. This was all the way back in, when was this? This was February of 2021. Sold off pretty massively, but if you look at what's been happening lately over the past couple of weeks, we're getting an uptick in volume. This thing is heavily shorted, and it was up 43% on Wednesday, crossed above the 200-day moving average. A lot of eyes on this right now, and we may potentially be looking at the beginnings of a short squeeze. So this is, if you want to be a degenerate, which, on some level I would have to say I am myself, I'm going to be paying attention to this because this thing has been running like crazy and there's a lot of volume behind it. So there is money to be made here, I guess is what I'm trying to say. And also, what's interesting is there is an options chain for this as well, so just be mindful of that. If we look at the put to call ratio, it was absolutely absurd on Wednesday, 0.08 for a put to call ratio. Pretty wild. We had over 600,000 calls transacted versus only 54,000 puts. So obviously people are very, very heavy on the call side for this right now. And, definitely one of the more, I don't know, when it comes to meme stocks, they're just really fun to have on your radar because you get these really big outsized moves, and this thing has been dormant for so long. The fact that it's now getting traction is very interesting to me. So continuing with this article, though, Opendoor gets the meme treatment. Opendoor has performed remarkably over the short term as the stock has now nearly tripled in just the last few weeks. Opendoor has historically been volatile, and it had fallen into penny stock range at a price of under $1. So some fluctuations in the share price are understandable, but it now appears that the momentum from a snowballing group of retail investors is pushing the stock higher. A post on Reddit's Wall Street Bets in May seems to have planted the seed for the recent rally. In a post titled Opendoor is the next Carvana, which now has more than 1,000 comments, one user said he bet $155,000 on Opendoor and laid out an argument for recovery with a change in its business model and the short-term impact of hedge funds closing their short bets at the end of the second quarter. A short squeeze may have also helped fuel the stock's gains on Wednesday, as 24% of the float was sold short as of mid-June, and the stock is seeing unusually high volume today with more than 219 million shares traded as of 2:30 p.m. Eastern on Wednesday, higher than in any session in the last year and well above the 90-day average of 84.8 million. So obviously there's a ton of action on this right now, so definitely keep an eye on it. No recommendations to buy or sell or anything like that, not financial advice, so I'm not going to give that out, but I will at least tell you that I will be tracking with this, and let's just say if things look right tomorrow, I might have to buy some calls on this because it's definitely getting some traction. I personally will be looking for, a bit of a pullback to, probably 150 being a psychological level when it's obviously been running. It needs to cool off a bit. I mean, if we just take a look at the RSI on this thing, it's insane right now. It's sitting at 83. So yeah, it needs to cool off a little bit. So I wouldn't be too surprised tomorrow to see a bit of a pullback. But, if this thing shows legs, that would be an entry point for continuation to the upside, at least in my opinion, right? So that's what I got for you, folks. Pretty jam-packed show. We got a lot going on. We'll see what happens with President Trump, if he's going to pull the trigger on firing Jerome Powell. I have heard rumors that if something like that were to happen, it would probably be Friday or Saturday, something like that towards the end of the week. So keep your eyes peeled for any news on that. And I will be back on Sunday, of course, for the market prep video. As always, that'll be out at 7 p.m. Eastern on Sunday. So appreciate the support. Thanks as always. Make sure to like, subscribe, and leave a comment. And folks, remember, plan the trade and trade the plan. Have a good one.